Welcome back, everybody, for another deep dive. This time, we're going to try to wrap our heads around what's going on with inflation in the U.S., what's happening right now, what we can expect in the weeks to come, and most importantly, how all of this is affecting you and me.
Sounds like a plan.
So to help us figure this out, we've got a bunch of different sources we're going to be looking at. We've got some analysis from factoring expert Chris Langs, and then we've also got data and forecasts from a whole range of sources like Reuters, Barron's, Comerica Bank, Liberty Street Economics, and Trading Economics.
Yeah, having a diverse range of sources like that is always really helpful. It lets us see things from a lot of different angles.
Exactly. So where should we start? Well, inflation did cool down a little bit in February. It fell to 2.8%.
Yeah.
But I feel like we need to unpack that a little bit because 2.8%, it doesn't sound that high.
Right.
But it's actually a pretty significant increase in prices compared to a year ago.
Yeah. It's helpful to think about it like this. Imagine a giant shopping cart. The kind you get at the supermarket, and fill it up with all the things you normally buy. Everything from groceries to gas to, your rent, maybe even that new phone you've been wanting.
Yeah.
And the CPI, or Consumer Price Index, is basically tracking how much the price of that whole shopping cart changes over time. So when they say 2.8%, it means that whole shopping cart full of stuff is almost 3% more expensive than it was a year ago.
That's a really good way to think about it. Like, how much more are we all paying for the same stuff?
Exactly.
Okay, so then we've also got something called core inflation. What exactly is that?
Core inflation is basically the same idea as the CPI, but we're taking out some of the items that tend to jump up and down in price a lot.
Okay.
Like food and energy prices.
Yeah.
Those can be really unpredictable. So by removing those from the calculation, we get a better sense of the underlying trends in prices.
Ah, I see. So it's like trying to get a clearer signal by filtering out some of the noise.
Exactly.
Okay, so what does core inflation tell us then?
Well, the good news is that core inflation slowed down in February. It fell to 3.1% compared to a year ago.
Wow.
And this is actually the slowest pace we've seen since April 2021, which suggests that maybe, just maybe, some of that intense pressure on prices might be starting to ease.
Oh, wow. That sounds promising. But you said maybe, so I'm guessing it's not quite time to celebrate just yet.
Well, it's certainly a step in the right direction.
Yeah.
But yeah, it's just one data point in a very complex picture.
Okay, so let's try to put that piece of the puzzle together with some of the other things that are happening. So, for example, housing costs. I mean, everyone knows that housing costs are just insane right now.
Oh, right.
And they're continuing to be a major factor driving inflation.
That's right.
In fact, shelter costs increased another 0.3% in February. Are you seeing that where you live? Are you seeing rents going up, or are you seeing, crazy home prices?
Oh, absolutely. The housing market is a huge part of this whole inflation picture. When housing costs go up, it eats into people's budgets.
Yeah.
They have less money to spend on other things.
Yeah.
And that can have a ripple effect throughout the whole economy.
Yeah, it's like everything's connected.
Right.
Okay, so let's talk energy. That energy prices have been all over the place lately, too. We've seen huge spikes, and then sometimes a little bit of relief.
Yeah, it's been a wild ride.
So what happened in February?
Well, overall, the energy index actually went up slightly in February.
Oh.
But here's the interesting part. Gas prices actually fell.
Really?
Yeah, they dropped by 1%.
So that's good news, right?
Well, it would be,
Uh-huh.
except for the fact that electricity and natural gas prices spiked last month.
Oh, no.
So it kind of canceled out any savings people might have gotten at the gas pump.
Ugh, so close yet so far.
It really shows you just how volatile the energy market can be.
Yeah.
1 minute you're saving a few bucks on gas, and then the next you're getting hit with a higher electricity bill.
It makes it so hard to plan. It's hard to know what to expect.
It definitely adds a layer of uncertainty.
Okay, so then let's talk food. Food is another essential expense that's been impacted by inflation. What's the latest there?
Well, overall, food prices actually held steady in February. But when you look at the details, it's a different story.
Oh.
Meat, poultry, fish, and eggs. All of those prices jumped up by 1.6%.
Wow, that's a big jump.
Yeah, and eggs in particular have become really expensive.
Yeah,
Like way more expensive than they used to be.
I've noticed that.
And a big part of that is because of this avian flu outbreak that's been going around. It's really disrupted the poultry industry. And it's not just affecting egg prices, it's also impacting chicken and turkey prices as well. You're probably seeing that at the grocery store too, right?
Oh, yeah. I've definitely noticed that I feel like my grocery bill just keeps going up.
It's definitely a pain.
Okay, so we've talked about housing, energy, and food. And we're seeing some signs of cooling inflation in some areas.
hmm
But then there's this whole other thing that's been making headlines, and that's the tariffs on steel and aluminum imports. And this is where things get really interesting, because now we're talking about how trade policy can actually influence inflation.
Right. It raises the question of, what happens when governments start to interfere with global trade?
Yeah.
And often the answer is that it can get really messy and really expensive really quickly.
Right, and that's exactly what's happening here. We've got these tariffs on steel and aluminum coming into the U.S., and then other countries are retaliating with their own tariffs on our goods.
Exactly. It's like a trade war.
And that just creates this whole chain reaction of rising costs. And ultimately, it's consumers like us who end up footing the bill.
It's a classic example of how interconnected the global economy really is. These policies don't exist in a vacuum. They have ripple effects that are felt all over the world.
Yeah, it's like a domino effect.
Right.
Okay, so just how serious are these consequences? We've heard a lot of talk, but are they really having a tangible impact?
Well, Goldman Sachs actually downgraded their forecast for U.S. GDP growth in 2025 from 2.4% to just 1.7%.
Wow.
And they specifically cited these tariffs as a major reason for the downgrade.
So that's a pretty significant impact. I mean, a lot of people might not even think about the connection between tariffs and their own personal finances. But it's there.
Yeah, think about it this way. Those tariffs on imported steel and aluminum are basically like adding a big tax on anything that's built with those materials. So that means higher prices for cars, appliances, even new construction. And then businesses are getting squeezed too because their costs are going up.
Yeah.
So their profits are shrinking. And all of this uncertainty makes investors nervous. So they might hold back on investing or hiring. It's like a triple whammy for the economy.
Wow, that's a really good point. I hadn't really thought about it like that. So basically, we've got this complex situation where we're seeing some positive signs with slowing inflation in some areas, but then these tariffs are creating this whole other set of challenges.
Exactly.
And then on top of all of that, we've got the Federal Reserve, the folks who control interest rates in the U.S., they're walking this tightrope because they're trying to keep inflation under control, but they also don't want to cause too much disruption to the economy.
Right.
It's like a balancing act.
It definitely is.
So what's the latest there? What are they doing?
Well, the Fed has kept interest rates steady for now. They're between 4.25% and 4.50%.
Okay.
But everyone's watching really closely to see how long that's going to last.
Yeah.
It's a tough decision. Do they raise rates to try to rein in inflation, even though that could risk slowing down the economy? Or do they wait and see if things settle down on their own?
Yeah, because raising interest rates could push the economy into a recession, right?
That's right. So it's a really delicate balancing act.
And then on top of all of that, we have to consider something called expectations.
Oh, yeah. This is where things get really interesting.
I know, because it seems like expectations can actually influence inflation.
They can. It's like a self-fulfilling prophecy. If everyone expects prices to go up, they're more likely to accept those higher prices. And that can actually fuel inflation even further.
So it's like our collective beliefs can shape reality.
In a way, yeah. The psychology of economics is fascinating.
So what are people expecting right now? Are they expecting inflation to continue to rise or to fall?
Well, recent surveys show that businesses have definitely increased their expectations for inflation over the next year. Manufacturers are now expecting inflation to be around 3.5%, and service firms are even higher at 4%.
Wow.
And consumers are feeling it too. Their expectations for inflation have risen to 3.1%. So it seems like everyone's bracing themselves for higher prices in the coming months.
Okay, so let me see if I can summarize this. We've got these cooling trends in some areas, which is good news. But then we've got the impact of the tariffs and these rising expectations, which are both pushing in the other direction. It's like a tug of war.
Yeah, that's a good way to put it. It's a really complex situation with a lot of moving parts.
All right, well, let's pause here for a moment and let all of that sink in. We've covered a lot of ground, but we're just getting started. When we come back, we'll dive deeper into what all of this means for March 2025 and beyond. So stay with us.
Okay, so we're back, and we just spent some time unpacking all of the different forces that are influencing inflation right now. I feel like we've got a lot to think about.
Definitely.
But let's try to connect the dots here and look ahead to March 2025. I mean, what can we expect at this point?
Well, all signs are pointing to inflation continuing to go up in March. It's always hard to say exactly what the number will be. But it seems pretty likely that it's going to be higher than the Fed's target of 2%.
So even though we saw that little dip in February, it sounds like we're still headed for more inflation. Why is that? I mean, shouldn't things be starting to cool down? Well, remember all those key drivers we talked about. We are seeing some areas where things are starting to slow down. But then we've got those ripple effects from the tariffs
Yeah.
and those rising expectations. Everyone's thinking prices are just going to keep going up.
Yeah.
All of that is kind of working against the cooling trends. It's like we're trying to paddle a boat upstream against a strong current.
I like that analogy. That makes a lot of sense. So what does all of this mean for us? I mean, for the average person who's just trying to, you know, make ends meet and navigate this crazy economic landscape?
That's the million-dollar question, isn't it? And honestly, the answer is going to be different for everyone depending on their individual circumstances. But I think having a deeper understanding of these inflationary forces can help all of us make more informed decisions.
Okay, so what kind of decisions are we talking about?
Well, for starters, it might be a good time to take a closer look at your spending habits.
Yeah.
See if there are any areas where you can cut back or maybe find more affordable alternatives.
So basically tighten the belt a little bit.
Yeah, exactly. Every little bit helps when prices are going up. Another area to think about is investing. When inflation is high, the value of cash erodes over time. So it might be smart to explore some investments that have the potential to outpace inflation.
That's a good point. But investing can be risky too, right?
It can be, so it's really important to do your research and talk to a financial professional before making any big decisions. Don't just take my word for it.
Right. Talk to the experts. Okay, so spending and investing. What else?
Well, I'd also encourage you to think about your career path. Is your current job in an industry that's likely to keep up with inflation, or are you in a field where wages are stagnating?
That's a really good point. I mean, if your income isn't keeping up with inflation, you're essentially falling behind.
Exactly.
Yeah.
So it might be time to explore some other opportunities, or maybe, try to negotiate a raise.
It sounds like being adaptable and proactive is really key here.
I think so. We can't just bury our heads in the sand and hope inflation goes away. We need to anticipate these challenges and make choices that are aligned with our long-term goals.
So basically, we need to be smart and we need to be prepared.
Right. And that's really one of the main takeaways I hope people get from this deep dive. Inflation is this complex beast. It's influenced by a lot of different factors, both here in the U.S. and around the world. But by understanding those forces, we can hopefully navigate these choppy economic waters a little more effectively.
Okay, so we've analyzed the data, we've explored the drivers, and we've even started to think about the potential impacts. But I have a feeling there's still more to uncover. So don't go anywhere, because when we come back, we're going to wrap up this inflation exploration with some final thoughts and a question that just might keep you pondering long after this episode ends. Welcome back, Inflation Explorers. We are ready for the final part of our journey today. We've gone over a lot, starting with those CPI ups and downs, and then the ripple effects coming from those tariffs. We even talked about how those increasing prices are keeping the Fed on their toes.
Yeah, and we've looked into how all of this is affecting our everyday lives and the decisions we make. But before we wrap things up, I want to leave you with something to think about.
Ooh, I do love a good thought-provoking question. Hit me with it.
Okay, so we spent some time discussing that balancing act the Fed is trying to pull off. Trying to keep inflation in check without causing too much disruption in the economy. But what about your own balancing act? Given everything we've learned about how inflation could stick around, what financial or lifestyle adjustments might you consider making?
That's a really great question. Are we talking about things like reconsidering big purchases? Maybe holding off on getting a new car or postponing that dream vacation? Or could it be something like taking a good hard look at our monthly budgets and seeing where we can cut back?
Exactly. Or maybe it even means looking into different ways to invest your money to try and make it grow faster than inflation in this kind of environment. It could even affect your career choices, seeking out those industries that are more likely to weather the storm of inflation, or maybe thinking about negotiating for cost of living adjustments.
It sounds like the key here is to be adaptable and proactive. Instead of just sitting back and reacting to price increases, maybe we can try to anticipate them and make choices that fit in with our long-term goals. Knowledge is power, right? Even when things feel uncertain, understanding how inflation works can give us some sense of control.
I totally agree. It's all about turning knowledge into action. And, even economists don't have all the answers. We're always learning, adapting, and trying to make sense of this fascinating and constantly changing economic landscape.
That's what makes it so interesting. The learning never stops. So keep exploring, keep asking questions, and stay curious. And that's a wrap for our deep dive into inflation today. We hope you found it informative and maybe even empowering. Until next time, stay informed and stay engaged.